September was a challenging month for Chinese equities. The Shanghai Composite Index ended broadly lower, weighed down by weakness in banks, property developers, and consumer sentiment. But even in a weak market, there were bright spots. Energy producers benefited from strong commodity demand, healthcare stocks held steady, and mining companies thrived as global metal prices surged. In this video, we'll walk you through the top 10 performers on the Shanghai Composite Index for September 2025. We'll look not only at their percentage changes, but also at the stories behind the moves. 10. Kweichow Moutai at number 10. We start with Kweichow Moutai, China's most famous liquor producer. The stock actually slipped 2.4% in September. So why is it in the top 10? The answer lies in the fact that many other heavyweight stocks fell much further. In a month where consumer sentiment was shaky and discretionary spending came under pressure, Moutai's relatively mild decline was seen as a sign of resilience. Its premium liquor remains a symbol of prestige in China, and investors still regard it as a long-term brand powerhouse. 9. ICBC, Industrial and Commercial Bank of China. At number 9 is ICBC, the world's largest bank by assets. ICBC shares dipped 1.8% in September. That might sound negative, but in the context of a financial sector that saw steeper losses, ICBC managed to limit the damage. Loan demand has been slowing and margins remain tight, but its sheer scale and government backing helped it maintain investor confidence better than its peers. 8. China Coal Energy. Number 8 goes to China Coal Energy, which eked out a small 0.2% gain. In a sea of red, even a fractional rise is significant. Coal demand remained steady, partly due to power shortages and high electricity consumption during late summer. Investors treated coal as a safe haven play, allowing China Coal to edge into positive territory while many sectors fell back. 7. China Shenhua Energy. Close behind is China Shenhua Energy, up 2.8%. As the largest coal producer in China, Shenhua benefited from the same supportive trends as China Coal Energy, but with stronger fundamentals and larger scale. Its integrated operations, covering mining, power generation, and transportation, made it more attractive to investors looking for stability in uncertain times. 6. China Tourism Duty Free. In 6th place, China Tourism Duty Free rose 3.3%. This company dominates duty-free retail sales in airports and resort destinations across China. With travel continuing to recover, both leisure and business segments helped sales stay firm. Investors rewarded its strong positioning in a niche consumer segment that has remained surprisingly resilient despite broader retail weakness. 5. LONGi Green Energy. Number 5 goes to LONGi Green Energy, which advanced 4.8%. LONGi is one of the world's largest solar panel producers, and it continues to ride the wave of renewable energy adoption. Policy support for clean energy in China and abroad, along with recovering export demand, helped drive gains. In a difficult month, green energy remained one of the few growth stories, and LONGi stood out as a leader. 4. Hengrui Medicine. At number 4, we have Hengrui Medicine, up 8.0%. As one of China's biggest pharmaceutical companies, Hengrui is known for its strong drug pipeline and research capability. September was no exception. Steady clinical progress and a consistent earnings outlook reassured investors. Healthcare, often seen as a defensive sector, offered a safe harbor amid market volatility. 3. Wuxi AppTec. 3rd place goes to Wuxi AppTec, which gained 8.8%. Wuxi provides contract research and development services to global pharmaceutical companies. The firm secured several new contracts in September, underscoring steady demand for outsourcing drug development. Investors took this as proof that Wuxi remains a key player in the healthcare supply chain, even as other industries struggled. 2. CMOC Group. China Molybdenum. In 2nd place is CMOC Group, which soared 27.2%. CMOC produces cobalt and molybdenum, both critical metals. Cobalt is widely used in electric vehicle batteries, while molybdenum is important in steel alloys. With demand rising in both sectors, CMOC became one of the month's hottest stocks. Investors saw it as a direct way to benefit from global trends in clean energy and infrastructure. 1. Zijin Mining Group. And finally, the top performer in September was Zijin Mining Group, up 27.6%. Zijin is one of the world's leading gold and copper producers. The rally in gold prices, fueled by global economic uncertainty and firm copper demand, driven by electrification and renewable projects, combined to push the stock higher. Its strong order book and global operations made it the clear standout in a challenging month for most other industries. So there you have it, the top 10 Shanghai Composite performers for September 2025. While banks and insurers dragged the index lower, energy, healthcare and mining stocks provided rare bright spots. This month's leaderboard shows that even in weak markets, there are always opportunities in sectors aligned with long-term growth themes like clean energy, healthcare innovation, and global resources. If you enjoyed this breakdown, please like and share the video. For more monthly rundowns and company spotlights, don't forget to subscribe and turn on notifications. And tell us in the comments, which Shanghai stock are you watching into October and why? We look forward to seeing you in the next video.